Welcome to FXpert Trading, where I use time cycles, median lines, and other technical analysis to identify trade setups in the US stock markets as well as the FX markets. If you like the information contained within this video, be sure to subscribe for more. This is the S&P E-mini futures chart on the daily time frame. We're finally starting to see some of that weakness that I've been expecting for some time now, using this blue 2-month cycle. We have CPI coming out on the 12th, which could be a catalyst either way for the market to sell off or to find its trough and continue on higher. But until we start to see some weakness in NVIDIA, which is not presenting itself at all, we can't expect too much downside in the overall markets. This is the NVIDIA daily chart, and we have blown right through this upper warning line. So I cloned another median line set and overlaid the lower warning line with the upper warning line, and I had to do that. I'll zoom out for a moment. You can see we have one median line set here, which I've now had to clone 3 times, as well as this median line set here, which I've also had to clone 3 times, and that's just starting to get a bit ridiculous as this just continues to rocket higher. And as I mentioned, the market cannot correct in a very meaningful way until NVIDIA does, and there's just no reason to believe it's going to anytime soon. There is a trough expected somewhere around March 19th, March 20th, but that doesn't mean there's going to be any type of big sell-off, especially the way this continues to just blow through every target that I can come up with. This is the daily chart for Apple. I closed the second half of my position. They were 175 puts with an April 5th expiration that I bought for $165 per contract, and I sold them today for $715 per contract. If we do some quick math, $715 per contract divided by 165, which is what I paid, minus 1, that will take out essentially what you paid for the contract. That's a profit of 333%, but that was only for half of the contracts. I closed the other half, which I discussed in prior videos, at 91%. So let's add 91%. And then because each one was a half, divide by 2. Overall in the position, I made 212%. If you add that to the 188% I made on the initial short position that I had opened, let's add 1.88. In total, I've made 400% shorting Apple since Monday, February the 26th. In my last video, I had mentioned how I planned on holding this potentially through to the expected trough on Wednesday, March 20th, or around there. So why did I close this position? Well, there are a few reasons. One, we have Powell testifying tomorrow, and 2 being we have CPI coming up on Tuesday. So we have potential catalysts which could cause Apple to react either way, to the upside or the downside. So I figured now could be a good time to lock in some profit. And considering we are at the expected trough zone for this 2-week cycle, we are near the median line, and we have reached or almost reached a 1-to-1 extension of this move here. Finally, we are also at some longer-term support or potential support. All of these things suggest now might be a good time to take profit and look for a potential better entry with a better risk to reward setup, at least prior to CPI. Another reason why I think we might get a better setup is because if we put some SMAs on, we can see the 10 SMA in yellow, the 5 SMA in white, and the 200 SMA in red. We're not really too concerned with that right now. I've discussed that in other videos and how that might suggest further downside to come. But for this video, I'm concerned with the 10 and the 5. On Tuesday, we reached over 5% below the 10 SMA. If we measure from the 10 SMA to the low, that gives us 5.74%. I looked at a number of historical examples and found when we reach a distance of about 5% or greater from the 10 SMA, it typically either marks the bottom that day or one of the following 2 days. That would be Wednesday or Thursday. There were a few cases where it did continue to just slowly grind lower or slowly move sideways as the EMAs caught up. In almost all cases, price action came back above the 5 SMA. It did not necessarily close back above the 5 SMA, but in almost all cases, it at least temporarily traded back above the 5 SMA. In many of the cases, it actually reached the 10 SMA again before continuing lower. Now, not in every case did it continue lower, but when it did continue lower, in many cases, it reached the 10 SMA or almost reached the 10 SMA again. So again, considering the potential support, the time cycles, and our distance from the 10 SMA, I think there's a very good chance we will get a bounce here, and that will give us a better entry opportunity prior to CPI. And so that way, should the market decide to move up after CPI, we'll have a better risk to reward entry in wherever the area is that we happen to get our new entry. If Apple should just continue to move lower, yes, that will be unfortunate that I'm no longer in the position, but I can't really complain after making 400% on 2 trades already to the downside. There is also the chance that the potential catalysts don't affect Apple at all. Apple has been doing its own thing relative to the rest of the market for some time now, and it just seems to be on a mission to get wherever it is going. As I discussed in the last video, there is a gap down here at 158.49, and I'm starting to think more and more that it is coming down, at least to this area. It might not fill the gap, but I do think this next cycle will be a negative cycle, meaning it will take out the low of this cycle whenever that is put in. And so I do think it will continue down this way. So I'll be looking for potential re-entries using the EMAs, using the lower warning line of this modified shift, and the break of any prior daily lows should we start to get a bounce. Finally, just a quick update for the VIX. I'm still holding all of the VIX calls that I bought on Monday. I have a resting order to close half of the position at 15.25. Should we get up there? We almost got up there on Tuesday, but we did not quite reach it, and it only came up to 15.10. 15.10 was the high. But I definitely like the way this is shaping up since we broke above this trend line, and now we have closed 2 days above. I think we will continue higher, especially, again, considering the weakness that's starting to come into the market now. As always, thank you for watching this video, and be sure to subscribe for more.